Hello. Hi, guys. Thanks for joining me. If you'd both like to give a brief introduction about what you do and when you came into the space and what you do for your firm, that would be great. Gaby, do you want to start off?
Yeah, I can kick it off. Thanks so much, everyone, for being here. This event, even just being a part of it and walking through, has been so cool to see, and I'm excited to hopefully meet more folks in the Celo ecosystem after this. But my name is Gaby Goldberg. I'm an investor at TCG Crypto. We're a consumer-focused crypto fund launched in 2021 after being spun out of a consumer and media firm called the Chernin Group, which has been investing in crypto exclusively focused on consumer applications since 2018. So their foray into the space started with the seed of OpenSea and then Dapper Labs with NBA Top Shot, followed by investing into an NFT horse racing game called Zed Run. And after that, decided they wanted to kind of spin out a more focused and intelligent practice, thinking about what consumer scale is going to look like in crypto. Our high-level thesis is that a lot of folks are building picks and shovels, and while that's important, we want to find where the gold is, and we believe that the value is really going to accrue to the transaction layer where applications drive those transactions. So we're slightly over a $100 million fund. We write checks up to $10 million, but we really focus on leading seed investments. Over the last 2 years have gotten to know a lot of founders who came from the Celo ecosystem, which has been really fun, and then spending times in similar areas, so spending time in emerging markets as well as just kind of everything across the gamut of consumer, gaming, digital fashion, music, sports, things like that.
That's really exciting. And hey, everyone, I'm Joyce from AnimocaBrands, portfolio manager managing over our about 400 company large portfolio. And overall, my role is a bit more towards post-investment. How do we really help those companies grow? But at the same time, a lot of these companies are also at the junction of looking at investment on follow-on, on how to navigate through choppy waters. So that's also my day-to-day as well. And for those who are less familiar, AnimocaBrands is started off as a game developer, a mobile game developer to be very exact. And over the course of the last 2 to 3 years, we have been expanding in terms of our reach through mostly through investment, but also about in the operations side, looking at tokenomics advisory, and also so on, like what are the next steps going forward. So we are very excited to be here and really looking forward to the conversation.
Thank you both. I think we want to hear where VCs are investing in 2023. I think over the last 2-3 years, there was a lot of focus on exchanges and trading, whereas now I've heard there's a lot more focus on infrastructure-based investments. Can you speak to where you see the rest of 2023 investments going and what you've seen so far?
Yeah, I can start. I mean, I kind of hinted at it already. And of course, I'm biased because this is where we spend time. But over the last few years, have seen more and more investors spend time not just investing in infrastructure, but also investing at the application layer and understanding what's actually going to drive net new consumers into the space. And it's been interesting to kind of see that shift and see what has worked and what hasn't worked and how perspectives have shifted on the investing side, but also with builders as well. So I think, Joyce, you might chat about this too, just thinking from the gaming space, how play to earn and like those areas have kind of shifted over the last couple of years, but specifically within consumer, I think one anecdotal piece that we probably all are familiar with is seeing how NFTs have changed and how they've been used over the last few years. I think it's just a good example on the consumer front of NFTs really started as like an isolated asset or an isolated platform, and that was the destination. Specifically in company building, NFTs were almost always used as the primary revenue stream. And so when NFT projects or companies that were using NFTs as a primary revenue stream would come pitch investors like us, they would say, you know, we've done this much in primary sales, but we've done this much in secondary sales of our NFTs. But when we look at that and we're trying to analyze this as a consumer business, really what that means is that's the amount of folks who have churned from the business. And so they're coming in, but really the incentive when you buy the NFT is to get out. And so a shift that I've noticed over the last year and a half is prices of NFTs across the board, regardless of if you're on an L1 or L2, are compressing. And you're seeing more and more free NFTs that are actually being used as an entry point into an ecosystem or into a community or into some sort of affinity group. And then the question there is like, once you have the NFT, instead of churning out, how do you stay there? And what are the other ways you can build a consumer business around that? And so we're still seeing investment kind of across the board thinking, what are going to drive these use cases, whether it's for a crypto native area of consumer passion or for something that is entirely net new where crypto might be under the hood, but that's a change that we've seen.
100%. I think there are a lot on the application layer asking for obfuscating almost that it is Web3 related. And because ultimately the consumers and the day-to-day users don't really care if it is blockchain filled, it's really caring about what are the benefits that they could get. So we definitely see the narrative around investment shifting more from we are going out for Web3 investments to what are these different projects can do for end users. And we are still looking for blockchain investments, but sometimes I also see that questions for the project team goes beyond your Web3 use cases, as well as how can you also tap into your other verticals? Maybe there will be AI, maybe there will be gaming, but what other vertical could you actually tap into with your product and outside Web3? But aside from, I think, the consumer side, I think the infrastructure is still very relevant. As the last panel at the almost tail end saying that wallet is still a very difficult part of the interface to get right, because usability is fundamentally difficult for anyone who's not used to a seed phrase. So we have seen a lot more innovation coming through with making, again, obfuscating the Web3 notion, meaning how do we use social login, Google login, or sometimes even mobile phone numbers. And all these are almost saying that, yes, we are powered by blockchain, but this infrastructure does not have to look like they have anything to do with blockchain. So I see that narrative being a bit shifted there as well. But overall, if I have to say something also adding on to infrastructure and the consumer side, gaming, I have to talk about that because that's almost where our bread and butter is as well. We have seen a lot of interest in gaming, and we do see that there is still continuously good amounts of money flow into that part of the world. That said, I would say the overall excitement, I think, has been coming through from the gaming that is a play to earn, almost towards shifting to, could we try what actually worked for Web2 gaming? Say free-to-play games was really good, and that is something that could we replicate that model here in Web3 as well, not requesting everyone to buy NFT in day one in order to partake in the game. So there are those areas I can definitely see still more of that shift. Yeah.
I think that's super interesting. Can you speak more to, I think there was a lot of focus on play-to-earn gaming, and that's obviously associated with crypto. What is the alternative? You mentioned free-to-earn. How does that work? What does that look like?
So that would look like in the traditional play-to-earn side, we have seen that users either need to purchase or they need to rent those NFTs from guilds in order to start playing the game, which then you would generate income. You might then share revenue with those guilds if you are a scholar. Where we see right now is it is creating barriers, it's creating friction for new users to join. So some of the games could potentially say, yes, we are still NFT based, but then instead of asking you to do any purchase upfront, you come in, you log in, we give you a wallet, and we already drop you a set of 10 NFTs. You can start playing from the first minute. You don't need to go through wallet setup and all the purchase process to begin. And so I think that is one entry point, that's the difference. Then on an ongoing basis, the question is when do you start having to introduce the wallet side, the digital ownership? And that part could be more becoming an option rather than the default path. So there will be people who are saying, I'm really only into this as a casual gamer. I don't plan to invest tons of time into it. So they might only stay in that free-to-play model forever. But you also would have other more serious gamers who are looking to branch out and say, I love playing games. I love going from game A to game B. And in that case, that digital ownership really empowers you to either export your status or your progress in that game, or some of the gaming assets that are really hard-earned that you want to either cash out or trade for similar type of assets in another game. So I think that goes from the traditional model of you ought to have a wallet, you ought to buy these NFTs, to having options. And then also those becoming when that option, the decision-making point sets in, it's also go from the beginning of the user journey to further later down the line when you already have fun, you actually get hooked into it.
If I could add to that, I think I agree with everything you said, and I think it applies outside of gaming as well, where what does this ecosystem look like when it has worked? And at least in my opinion, in a lot of ways, if crypto works, it largely disappears. And you kind of can see that with other technologies as well. If you look up the frequencies of a word in like the Google Books corpus, and you can kind of see how often a word is searched on Google or how often a word is referenced in a book or something like that. You see it with like the word railroad, it goes up and then it goes back down. And now no one talks about the word railroad anymore. You see that with the word software or the word mobile. And we haven't really reached that quite yet with crypto. And I think maybe the problem with play to earn gaming is the platform actually was crypto, when really crypto should have just been the tool, and the platform was the game, and the game was fun to play, and that's why people were excited about it. So for us, where we spend time, and this is something I've kind of like come to terms with more recently, where I used to invest and where I used to be most excited, if you looked at crypto on a spectrum of crypto native areas of consumer passion over here, and then maybe Web 2.1 type businesses here, which are very crypto light, I spent a lot of time in the middle onboarding folks to crypto. So it would be something like, wow, if I could get my friends to get a wallet, that would be super exciting for me. I remember over Thanksgiving a few years ago, I got my parents to get their own wallet, and it was so exciting. And then they even said it on the last panel, people can barely remember their Facebook password. Like, that's definitely my dad. And now he has to manage this seed phrase, which is really scary almost. And so now where we spend time is on the edges of the spectrum. So in gaming, at least on the crypto native side, we get really excited about on-chain gaming, where that's a crypto native area of passion. And we don't expect the market is going to be huge tomorrow, but the people who are there, they get it, they understand it, they already have a wallet, and that area of passion goes really deep. And then on the other side of gaming, the platform is really the game, and many of the players ideally don't know it's crypto at all. So I don't know how much time you spend in like free-to-own type gaming, where they earn NFTs as part of the game for free, and then it kind of enables them to be more retentive and engaged within the platform. That gets exciting as well, but play to earn, I think, has the problem of being a little bit stuck in the middle.
That's super interesting. Gaby, I think you touched a little bit, but you've both been investing in the space for sort of the last 2 years. I'm wondering how your perspectives have sort of shifted. I think you kind of answered that, but Joyce, maybe you could add?
I'd love to. I think there is always a phase in terms of the what is hot right now. And so there is a very big narrative. We talk about usability, UX sucks for Web3. So all of a sudden, everyone is building around how do we improve the UX? And there is the infrastructure, there's your wallet, there is sometimes also like identity, data passport type as well. And I think where that shifts then tends to be, it is not that fundamentally our needs as an ecosystem has changed. It's just that we have a lot more builders have now focused their time into that. So the balance has shifted to say, maybe we also lack great experiences for people to overcome whatever friction we introduce them to as they get on Web3. So I do think that it's a bit more of that balance of how do we make sure that as these infrastructure mature, we are also getting these experiences ready. So you won't have a situation where onboarding is great, but I don't really know why I should onboard to Web3 at all. And that's why we see a lot of that thesis almost going into, to us, more different culture verticals. Gaming is one touch point in our day-to-day life. And to many of us, that could be very big. But for some people, they barely game. So how do we also reach to those people? And I think, like Gaby, you have invested a lot more in the consumer space, and I would imagine that goes across music, fashion. So a lot of these would really be different touch points for people. So then I would love to hear more of like how you think, going on a bit detail maybe about like what you have been seeing in these verticals.
Yeah, I can definitely do that. I think music is another interesting one. I don't know how many folks in the audience have spent time in Web3 music or have interest in that area. I think that one similarly has kind of this problem of being on the spectrum of there are now kind of crypto native artists, or you have totally incumbent artists using crypto as a tool, but not trying to make it a platform. Really, like the platform is their music and their existing user base. And I, again, think it can sometimes be difficult to get stuck in the middle. So, for example, one area that I think is interesting, but I haven't gotten quite comfortable with yet, is this idea of on-chain royalties for fans who basically invest in music. And at least my thinking there I'm a huge music fan of some artists, and then talking to other folks who are super fans of artists, they've never wanted to make $10, $15 from investing in their favorite artist. Really, they would actually rather pay more to get closer, and access is what is most important. And so that is where we have spent most of our time, is instead of trying to cut into existing business models, right? Big artists already have a label, they already have a manager, they already kind of have their existing stack of how they do business, and they don't necessarily want to break that up. How do you add something new on top that actually grows the overall market in turn? So for example, we're investors in a company called Medallion that launches fan clubs for artists like Tycho, Illenium, Sigur Rós, My Morning Jacket. None of the fans of these artists care about crypto at all, and the goal is not to make them care about crypto, but instead, how do you bring them into these fan clubs by way of NFTs? Get them comfortable with the idea of purchasing digital assets. Maybe it's a live stream, or maybe it's a private AMA with that artist, or maybe it's access to get Ticketmaster presale tickets. And then once you're in that community, you actually have a propensity to spend more. And so the early data on those types of communities powered by NFTs has been really compelling of, growing 30% month on month, bigger than what they had previously in their Reddit, Facebook, Discord communities. And so thinking about crypto as a tool again there is helpful. And maybe we'll get into it a little bit later, but the comments from Joyce, you, and also on the last panel about wallets, I think are, again, a huge blocker in actually getting us there at scale. When people talk about infrastructure and scale of kind of what we need to get to real consumer scale, I think a part of it is actually, are our blockchains performant enough, and can they scale to fit the amount of usage that we want? But the other side of it is do we have good enough key management? And actually talking to folks, I have some friends from the Valora ecosystem in that community, and in their experience going into emerging markets, going in, they thought the hardest thing was going to be our blockchains aren't performant enough for all the people that we want to bring on board. But really it was key management of how do we give these people a wallet and enable them to use it safely in a way that can scale once we leave and once we're no longer hand-holding them into that ecosystem.
That's super interesting. Thank you. I think after a super difficult year for VC, what advice do you guys have for VC and founders navigating this sort of new venture landscape? Even when it comes, you can be specific, speak to fundraising. What do you guys recommend?
I'm happy to go first. I think that the healthy thing to acknowledge is that fundraising is more difficult this year than the year past, the year before, and that might not change anytime very soon. And because of that, I think there are two outcomes. The reason being why it is harder to raise right now, because VCs are also finding it harder to raise their own funds. And so it is not like the VCs are just maliciously sitting on their hands and not doing anything. It's really that interest rate has gone up and money has become so much more expensive. And that creates a lot of hurdle on what type of risk they could take on given the expected returns they could get back in, especially compared to a lot more traditional finance instruments that give them higher, well, not necessarily higher, but then definitely a safer bet. So I think with that acknowledgement in mind, I think we see that anytime that people are going out for investment, asking for investment, we now see a lot more questions on what is your actual user adoption and what are their revenue? Or maybe you're not at revenue yet, but how soon could you get to revenue? What's your path? What's your go-to market? And I think those become very much part of the conversation as it does in many other industries in the past. But perhaps Web3 has seen a bit of a different variety of excitement in the last 2 years. That's why this is a bit newer to us, when in fact, I think that has been more prevalent over to other verticals as well. But yeah.
Gaby?
Private markets are kind of funny in that they lag public by a few quarters, and venture capital is no different. So all of this applies to crypto, but really it's venture capital at large. There's been a massive correction over the last, I would say, year. You see prices peaked in November 2021, and you really didn't see a change in, I would say, mid-year 2022. Now inflation is down and rates potentially may have stabilized or are coming down as well. And so it'll be interesting to see, giving a 2 to 3 quarter lag, what happens in the private markets from there. But all of that aside, this advice is not helpful to give now, but candidly, I think the advice for founders is to be thinking about bear markets during a bull market. If you can raise during a bull market, it's amazing and potentially get more preferable terms. And then think about, what do you really need to spend money on? What is crucial for the business from a time and capital perspective, and allocating that way so that when the bear market does come, and we all know that crypto moves in cycles, you can be a little bit more prepared. And then I guess the other piece of advice there is, for founders, think about what it is that you are optimizing for, because capital is largely a commodity now. You can raise money in a lot of different ways. And even from VC, there are more options now than ever before, and information passes very quickly. So is it a certain partner that you're optimizing for? Is it a firm that has a large platform team that can help you with engineering resources or help with tokenomics? Or are you optimizing for valuation and you actually don't care where the money comes from? All of these things are important to think through. And then on the valuation piece, understanding that that's the valuation that sets the expectations for your company across market cycles. And so that's something that you're going to have to grow into, which might feel harder or easier as the market changes more broadly.
I would add on top to that, and because coming from my more portfolio side of thinking, is that if you have already got funds either through bootstrapping or whether you have already raised before, there is a big piece of treasury management that I think we have seen painful lessons from before, whether it is people who have got all of their money in one place, and so if that platform falls, your treasury goes with it. Or let's say there's simply a loss of expectation. I want to grow my product. I want to grow my marketing. So pumping the brake, well, pumping, I don't drive. I really should not have gone on to this analogy. But like, it is really how do you, like, you should just think about how do you conserve runway to exactly as you said, right? To spend on the right things at the right time, and not necessarily saying that, oh, I just want to grow, so let me just keep going no matter what, because then it shortens your runway, it puts you in a much more difficult conversation as you actually have that in the investors.
Can you, either of you, speak to how valuation ranges are differing from, say, 2021 to 2022 to now?
I don't have numbers that I can share. I don't have any like aggregated numbers top of mind. Valuations certainly have come down, although it was, like I kind of said, took longer than I thought. It was right around the time of SVB, and sorry to remind everyone of that terrible week, but right around that time is when I saw valuations finally coming down. But I think the helpful advice there, and this is helpful across market cycles again too, even if we were back in these crazier valuations from 2021, it's helpful to raise on kind of like the back half of your business. And so if you're in between a pre-seed and a seed, for example, raising a pre-seed is going to take you a lot less time, and you're going to find a partner much more quickly. And the terms actually might be more favorable for where you are, versus you're going to try and go up and raise a seed, and that might end up actually taking you a month, and it's a drawn out process. And we all know that like raising money really sucks. Now having to raise money for a fund, I empathize with founders how much it sucks. And so that's also helpful. But certainly they've come down in many cases, and I know it's not helpful to hear from an investor, but in many cases I think it's a good thing, in the sense that valuations were so high previously that now you have founders who, or companies who, are looking for more money, and they are kind of strapped for options, because the option is potentially to raise a down round or raise a round at a flat valuation, because it's difficult to grow into where they are now based on where the crypto market is and how fast they can grow.
I also don't have exact numbers to share, but I think sometimes people do reference, just look at how much Ethereum has gone down. Then I think maybe there are some of the benchmarks that people could use for. But I think one more thing in terms of the investment, or if you're seeking investment right now, I think infrastructure is still relatively at a good spot as it becomes so much widely recognized as the thing to invest in. And there are better ways or more clarity in how to monetize. If you're going for something that is further out, maybe more application layer, where the monetization model is still to be explored, then potentially working with people who are more strategic investors rather than pure financial investors could give you a bit more of that alignment. And I think coming back to your point on picking your investors, that part is essentially asking or seeing that certain strategic investors might say, I see a point of how we can all work together as an ecosystem, versus if it's a pure financial consideration, then the whole question around risk-adjusted returns would be very prevalent, and you will have to justify why you're worth that valuation, given this market has gone down, could be like 30, 50, or 70%.
Thank you. Just to end on a high note, could you each tell me about a cool project that you've invested in recently? I know, Gaby, you mentioned a little bit about the music rights. That's super interesting. Joyce, if you want to start off by telling us about something interesting you invested in.
Yeah, I think like the most recent ones that we have been, or most recent ones that has launched is actually a game. It's a mobile game called Cross the Ages. And then it is very much hitting a lot of the things that we have talked through, being it's a mobile game where you don't really need a wallet to start playing. And then at the same time, you have the options of like turning those into NFTs if you so choose. Excitement coming from because they have actually topped some of the they have topped the app charts or the app store charts in a few countries, and most people who are playing do not know that they are any way or form a Web3 or blockchain game.
That's cool, thank you.
That's super cool. I'll do two really quickly. The first one is actually a previous Celo teammate who's now starting her own company, and it's been really cool to work with her and learn more about the awesome folks in Celo. It's an MPC-powered wallet as a service company really focused on transaction signing. So I heard Leighton talking about how he's kind of a multi-sig maximalist. And so if anybody's thinking about how you can more easily onboard users to your application using MPC, I'd love to chat with you more about this company. And then the other one is not in the Celo ecosystem, but very aligned from a thesis perspective. It's a company called Gia doing blockchain-based microlending to small businesses in emerging markets. This one has just been so cool to hear case studies of individuals in these areas who have never had upfront capital before to run their business, potentially don't have a credit score, and now bringing this data on chain, accessing upfront capital, and being able to grow their businesses has been really, really cool. And I'm excited to see where it goes from there. They're raising for a liquidity pool, so if anybody contributes liquidity as an individual, I can tell you more for sure. But those are two that have been super fun to work with.
Thank you both so much for your time. Thank you.